What's up, Wildcatters? Welcome back to the show. We've got our buddy John Ludwig with Novi. It's just Novi now, right? Not Novi Labs. You guys
the labs is still there.
Still there?
Keep it around for sentimental reasons.
Yeah. This is we were just talking about it. You were at the original OG studio when we started 3 years ago. You went downtown with us. Now you're back in the new studio, which is in the same building as the first studio. This is like your third, fourth, fifth time. I don't know.
Third time
on the show.
Yep. Third time on the show.
So you guys just released a pretty big announcement. So I reached out and I was just like, hey, congrats on this. Would love to chat with you guys about this. It kind of somewhat changes the trajectory of the company a little bit, I think, in terms of like what your service offerings are and what you're offering to customers. So for those who are just not tuning in, they have no exposure to who Novi has been traditionally. What have you guys traditionally done? And then we'll kind of dive into what you guys do it now.
Yeah, we started the company back in 2014, and we've always been focused on using empirical methods to help customers gain insights from data. So we've always focused on oil and gas, specifically horizontal drilling. And we basically try to build a better way using cloud scale compute, machine learning algorithms, et cetera, build a better way to make a forecast for a well. So we have software that organizes data. We have software that builds models. We have software that allows customers to leverage the models to actually make actionable business decisions. So you notice the first thing I said there was data.
Mm-hmm.
So traditionally, we show up, start a customer engagement, and we say to the customer, "Where's your data? We need to put your data in." And they say, "Okay. Well, some of it's over here, and some of it's over there, and some of it I got to download from a data subscription that I have, and then it ends up taking a few months in a lot of cases to put a data set together."
Mm-hmm.
So when we were thinking about this acquisition, the strategy behind it was pretty simple. Like, what if the data were just there? And what if they just had a model on day one that represents the sum total of our 7 years of experience doing this, and they could use that model on day one to make actionable business decisions? So that's what we were targeting. It's like,
Mm-hmm.
we had the software to do it. We had the software to integrate and blend the data. We had the software to make the models. It'd just be great if we just did it for them and it was there on day one. And that's kind of what we were targeting when we put the thesis together to make the acquisition.
So what kind of models are you guys building? Is it models for PDP? Is it models for a new drilling program? Kind of elaborate on that a little bit.
Yeah, both. I mean, that's changed over the years.
Yeah.
And it's really been driven by our customers. So we started off in pre-drill. So customers could create different ways they might develop the field, undeveloped acreage. And then they would put it in our software, which we provide interfaces to make that pretty easy. And then they could run forecasts. So our software would create forecasts for different cube designs, different development patterns, different ways you might time the development. You know, if you can't allocate enough capital to do co-development, maybe you want to do parent-child, but you want to see what impacts that going to have on my NPV or my IRR if I stagger the development like that. So we've always been historically really good at that and developed a lot of competency around that. Then one of our customers, large Midland operator, came to us with a question. They're like, "We like your pre-drill stuff. That's cool. But we'd really see a lot of value in automating our PDP forecasts." And really, PDP forecasts have kind of two very different lenses. One is for reserves, which drives one aspect of an oil company's value. How much reserves replenishment do you have? And the other use case is capital planning, right? Mm-hmm. Which is, okay, I'm making assumptions about future oil prices. And obviously those assumptions must have changed wildly in the last 2 years for most companies. I mean, it's $90 now. It was negative 37, 2 years ago. So
it's been a wild ride, man.
Yeah, totally. So given that there's this wild ride for a variety of assumptions on forward price outlook, capital, it drives your hedging strategy. Having really good PDP forecasts is very important. So, and then there's a lot of G&A pressure on the industry, both now and really since COVID, but even really before that, this is happening. So there's a lot of focus in the industry on automation. So we were trying to do two things with PDP forecasting. Number one, automate it, make it easier, especially for companies that have a lot of wells. And then number two, we wanted to make the forecasts more accurate. So if they're more accurate and they're automated, why are you spending all this engineering time hand curating the forecast? So with that particular customer I mentioned, they gave us this problem. They said, "Are you willing to work with us in this?" And we said, "Let's do it." You know, we started the company that way, working on pre-drill. So post-drill was a natural extension. We had to completely change our approach. We had to use different algorithms. So a couple of years of development went into it, but now we have fully functional PDP product as well, and we're pretty excited about both of them.
Are you guys doing anything on the evaluation of any kind of acquisitions?
Yeah, both acquisitions and divestitures. So, great example. One of our customers was Primex Energy Partners, right? So Primex, in October of last year, they announced that they're being acquired by Callan. So that transaction happened in the Delaware. So Primex was actually interested in maximizing the value of the acquisition. Therefore, they wanted to make a compelling case as to the quality of their acreage. So they ran all these development scenarios through our software so they could make the most compelling case that they could. And that worked out very well for them. Because you want to make a case not only that your acreage is good, but that also your acreage should attract capital relative to the company that's acquiring you, relative to the acreage that they have, right? So they actually ran the scenario on both sides of the fence, one on the Callan side and one on their side, and said, "See, if you acquired us, our acreage is worth a significant amount of uplift because it should attract capital internally." So that's on the divestiture side. On the acquisition side, almost all of our customers have now our software kind of started in the asset. That was always our customers, the reservoir engineers, senior reservoir engineers, and asset managers and executives and so on. We've now seen a shift where a lot of the use cases are focused on acquisition or divestiture. Because now that we have PDP forecasts that are very accurate, that's part of the picture. You got to figure out what you're going to pay for the producing wells. Then you got to figure out what the proven undeveloped acreage is worth. So we can now answer both of those questions. Therefore, it's customers can use our software, quickly create forecasts of the future performance of undeveloped or developed acreage, and then use that as an input into their offer, and ultimately, hopefully, convince the seller that their offer is a good offer because these forecasts are so accurate.
Interesting. So I think that could definitely tie in, and I'm sure it does, with the acquisition that you guys just made. So I have a question around that, but let's dive into what it is. You guys acquired Shale Profile.
Yes.
Which I think is based in the UK or
Netherlands.
Netherlands.
Yes. So we have an office in Rotterdam now.
So strange. But seeing those guys, they've been putting out content and stuff on Twitter for a while, especially like in the EFT crowd. They were kind of doing their own analysis, or some people were using their data to kind of do some analysis. So we known about them for quite a while. So what was kind of like the genesis of this deal? Was this something that you guys were going out and you were evaluating different data providers after identifying that, hey, we really need to kind of shorten up that time frame of like onboarding and provide more value to the customers? Or was this something that just kind of like serendipitously happened?
Yeah, serendipity is a hard thing for me to believe in. Everything happens for a reason, So we met the Shale Profile team at ERTech in 2019. So they had a booth there. And we liked the guys. They were serious. They were applying very modern data architecture, development patterns, et cetera. We felt like they had the freshest look on the data aggregation problem that existed. So we took a look at them in 2019. And at the time, we loved their technology, loved the potential, but there was a bunch of data sets that they were missing that were necessary really for us to provide the kind of value. So we kind of said, not now, maybe later. So we stayed in touch. We kind of adopted a partnership strategy on the data side, which is fine, but partnerships it's two different companies, right? So partnerships work out. Sometimes they don't work out. But from our point of view, we wanted to be able to consistently deliver accurate, timely, and complete data, right? So we took another look at Shale Profile around midsummer timeframe. Timing was good for us. Timing was great for them. Business-wise, it was the right time for both of us. So we did one of the advantages we have is we have a huge database of actual proprietary well data that customers load into our system. So we had thousands of wells in some of the key shale plays. So we just took thousands of wells from the Midland and the Delaware. And our due diligence with Shell Profile is really simple. Let's look at your accuracy, timeliness, and completeness against this reference data set of 10,000 wells.
Mhm.
So we knew the quality of what we were buying, which was a capability that we had just based on our experience and the data sets that we've accumulated over the years. So we went into the deal very, very confident that this was the most accurate, complete, and timely data set we've seen.
Mhm.
And from our point of view, this is an asset. We decided partnership strategy is never going to work as well as owning it.
Yeah.
So let's just own it. And that's kind of how it happened.
So now you're in the data game.
We're in the data game.
You're competing against the they who should not be named, right?
Yeah. Some of whom are in our backyard.
Yeah.
Yeah. I mean, we're years ago, my father told me something that stuck with me. I've always thought about this when I think about big business decisions, but we were talking about sports, baseball or something. And I was like, man, the other guy, the pitcher on the other team, he's throwing the ball right at my head, or he's doing this, or the other guy's doing that. And my dad would always say, don't worry about what the other guy's doing. Only worry about what you're doing.
Mhm.
And I think about that a lot. And it's kind of like forms my thinking on a lot of different things. I guess my philosophy on life and other things like that. So when I thought about this data acquisition, I didn't think of it like, oh, we're going to do this and then we're going to take down the big guys or whatever. I thought of it from the perspective of customers want a fully integrated data to decision workflow, right?
Mhm.
So all the time they're spending just meandering around, going all these different databases, getting all this data, compiling it, putting it in our system. I view that as waste, right? It's like, how do I get them to a position where they could buy my software and then on day one, they're able to use it and get value out of it? That's the question I wanted to answer. So I didn't really think of us, I don't think of us still as just a pure competitor to a traditional data. Traditional data providers aggregate data from public sources. They do some transformations. Maybe they add some other data like spacing or other things it's missing. And then they sell a ubiquitous product to everyone. So everyone gets the exact same product. We feel like what's needed is, yes, you need to have all that static data, but you need to give customers control or the ability to configure how your calculations are done. So for example, you're going to calculate spacing, you need to give the customer control over how the spacing calculation is done. You're going to sample subsurface grids like porosity or permeability grids or things like that. You want to give customers control over how the sampling happens. I mean, we sell to engineers, they want to control stuff like this.
Does that apply to like how allocations are calculated in a place like Texas?
Yes. Yeah. So that's
always a huge talking point, right?
Yeah. The allocation problem in Texas is one of the things we think the Shell Profile team has actually done a really good job with it relative to what we've seen from other providers. But getting back to what I mentioned earlier about NOVY's large database of actuals, we have the world's largest answer key among the data that customers contribute. So if you have the largest answer key, I don't care what machine learning you're using, you're going to come up with a better answer. It's inevitable. So that's a problem we're going to work on with the Shell Profile team, like pretty much straight out of the gate. We have a number of customers that have already bought subscriptions to the data. And really the thing they're most interested in, they're like, great, make the completions data a little bit more accurate. That's great. Fill in missing values, use some statistical imputation. That's all great. But if you could just get us better allocation data, I bet we could make better decisions. So that's what we're focused on. One of the things we're focused on right out of the gate. And then the other thing is to fully integrate their data into our software. So it, like when I talk about day one value proposition, you can't have that without the data, right? So we want to fully integrate their data into our pipeline. So like day one, engineers looking at all the data, it's loaded, it's kept evergreen automatically. They don't have to go download spreadsheets and upload spreadsheets and do a bunch of manual stuff. It's just there. So that's that fully integrated data to decision workflow is the other big driver for us.
And I'd imagine, kind of going back to what we talked about with the acquisitions, that you would be, if you had this data set already loaded up into your software to be able to create models to identify opportunities, in theory, you should be able to do that at scale and a lot faster and identify.
Yeah. So we actually have a name for that. We call it proactive targeting, right?
Okay.
So there's a thesis widely held among oil companies that are trying to buy assets that you don't want to buy something that's actually for sale. It's the same is true of software companies. You have to, if you get
market deals, man.
Yeah, if you get something that's a marketed deal, you're kind of like, what's wrong with it?
Yep. Why does nobody else want this?
Why couldn't they just made a phone call and sold this thing? Like, as much interest as there is in oil assets right now with current price structure. So proactive targeting is really important. So part of our value proposition is not only is the data there, but you have a model. So you could look at a corner of, somebody's acreage and say, you know what? They have so much stuff that's better than this. They're never going to develop this, not for years, right? So then you could say, carve out this little piece. Let me figure out what the potential is, right? And then you call their BD guy and you're like, I want to buy this from you. You're never going to get to it. And here's my proof. I think it's worth this. What do you think? And now you're not in a competitive free-for-all bidding situation. You're just talking and seeing if there's a deal that could be made.
That's okay. let me kind of provide some commentary. That is so much easier than people think it is because I've done it. One of the biggest, let's talk about the genesis of Digital Wildcatters because it actually happened the other day. Like Digital Wildcatters was originally our YouTube channel, and it was us videoing us buying and evaluating those wells that we bought in Oklahoma. And then we videoed us like doing the first workovers and stuff. And ever since then, one of the top questions was, from engineers or any other investors in the space, I'm like, how do we just go out and buy our own wells? And I told them exactly what you just said. For one, it's off-market deals are going to be the best deals for you. And two, if you're able to go through and just identify assets that nobody's using, or it's just like it's a stranded asset that doesn't fit in with kind of the rest of the portfolio, go pick up the phone. Anybody will take the time if you say, I want to buy shit from you. They will always take the time to do that.
Yeah, that's what they're paid to. BD, almost all of our customers have some kind of BD function or a land guy or, something that works there. Usually a pretty sophisticated person, a lot of experience, and that's their job.
But I never had a tool to make that easy.
Yeah.
And had I had a tool, we probably would have made a lot more money from those assets.
So that's one of our goals in having our own data is that we can provide that. So a great example, can't tell you the name of the company, but one of our prospects, not a customer yet, but a prospect bought an asset in the Eagle Ford. Really nice asset, but they already have it, it's pretty drilled up. They're going to probably do some lease line stuff. So there's a use case for asset optimization, but it's strong, but it's not super strong. Far stronger than that is, hey, we have a lot more capital available to us. We want to look in other basins, right? So how do I do that? Like, okay, I can download a bunch of data and I could put together my own type curve model, but trying to do that with some scale behind it for like.
So they're just focused on the Eagle Ford currently.
Yes.
And they're wanting to go to an entirely new basin.
Yes. Okay. Yeah. So like, let's say for example, you own acreage. It's kind of drilled up. So you're like, well, should I deploy capital drilling wells that I know are not going to be great performers just because I'm trying to wedge them in, or I'm trying to go underneath something that was developed 4 years ago or whatever? Like, you can get returns on that stuff, especially at current prices, but it's a risky proposition. So maybe you just buy that thing and own the PDP and, do some workovers, make the wells a little better. And really the better use of capital might be not drilling. Maybe it's go buy something else. So they want to go look in other basins, but small team, what's available to them to help them sort of scale their decision-making process? I'd argue it's us. Otherwise, I kind of think of other providers out there, traditional data providers, like they sell you a bunch of car parts, no owner's manual. And then you're like sitting there with a bunch of parts and you're like, how do I put together the car that I want to drive? It will take you a long time. And then once you've built it, you realize, man, I made a lot of mistakes. This car doesn't go as fast as I wanted to. It doesn't stop as well as I wanted to. So if you want to change anything in your workflow, now it's weeks more of work, right? So we feel like we can provide a lot of value by just simply just selling a pre-made model in some basin you're interested in and licensing it at terms that are very flexible. So instead of the traditional, I got to take all the data, I got to make a big spreadsheet, I got to fix all the data that's broken, all of that stuff. You have a working model that you can use to drive business decisions, like drive your targeting, proactive targeting, if that's what you're doing or whatever. It's just there and you can start using it on day one. And that's kind of what we're trying to provide.
Is the model providing actual present value of different assets?
Yeah. So you can, so we generate economic data
Yeah.
for everything that we do. So it's time series economic data, rate of return, NPV, et cetera. So we calculate that on a per well basis, and then of course it's easy to roll it up to a development unit or whatever.
In this scenario, you have this prospect who has a lot of assets in the Eagle Ford. Say they wanted to go to, let's name something random. They want to go to the Permian, right?
Mm-hmm.
Everybody's in the Permian right now. Now that you have all of this data, now that you're able to kind of run these models at scale, are you able to kind of roll that up into, here are the opportunities within that, into like a dashboard and saying like, hey, within, say, the Permian, there's certain counties that are meeting maybe my set of parameters, right? And then because that's the hard part. It's like, where do you start, right? And you've got to be able to filter that down and understand, where am I in the money given my solid parameters?
Yeah. So we have customers that actually will run scenarios in our software where they'll like place pads all over the place. So if they're interested in a particular area, they'll just place a bunch of pads anywhere where there's open acreage. They'll place a bunch of pads there, or they'll place developments, like a Wolfcamp B parent-child development underneath a Wolfcamp A that was drilled a couple years ago or whatever. So if they do this, they can easily generate estimates of value, because we will output all of the NPV calculations, IRR calculations, et cetera. So we've had customers that have done this, and then they've made a map out of the NPV data that we provide. So we're kind of looking at, we always follow what our customers do, because they always come up with creative ways to use our data we never even thought of. And then what we try to do is follow behind that and say, how can I make that easier? Or how can I make it faster to do that? Or how can I eliminate wasted time for them so that they can do those sorts of things with our software, but just do it as part of an integrated automated workflow. So now that we have this shale profile data, we're thinking about things like, basin-wide valuations or other things that would be, derived from this underlying capability to have your own data, build your own model, and lay pads all over any sized undeveloped acreage you want. And, for Novi customers, that's an afternoon's work, not months. Which is what it would take.
It's so
traditional methods.
Like going back to what I said, it's easy to pick up the phone and make calls. It's not easy to identify where you're going to make money.
Yes.
So let me go back on that and say that it takes, I don't know, it took us probably the greater part of a year and a half, maybe 2 years to figure out where we wanted to go. And it was like deal after deal after deal and plugging them into spreadsheets. That's all we had access to at the time, and so it's just super time consuming. So does Novi live as a standalone product? I mean, is there kind of like three offerings of like one, the other, and then combined? Is that how it's going to kind of move forward? Or
yeah, so there's really there's really four offerings. So one, if a customer only wants to buy data, we will sell a data subscription. I think that's Shale Profile's current business, and we'll keep supporting that.
What's the price point on that for anybody's listening?
It depends. So one of the things we're trying to solve commercially is legacy data providers are trying to force feed customers full lower 48 subscriptions instead of being flexible about licensing only what they want. So price points can vary a great deal.
I think it's smart. Sorry to interrupt, but I'm looking into investing in some Airbnbs, and there's a company called AirDNA that allows you, as opposed to, like you just said, having to pay nationally and paying this huge price. If I'm only interested in opening an Airbnb in Houston, I pay for Houston. That's it. You just pay for individual markets, and it's so much more economical.
Yeah, great example. I mean, we're the same customer, the management team that ran Primex immediately started a company called Blue Ox Resources, and they just announced it. They were backed by Carnelian Capital, and Primex officially ended on the 1st of December. By like January 1st, they had a new company up and running, and they're now a customer.
Wow.
So it's been they had a lot of success with us before. Made some money.
That says a lot to go from boom selling to immediately a customer with.
Yeah, I mean, successful management teams are not exactly a dime a dozen, right? Yeah. So they typically don't have a problem getting funded, and it's a great team. I mean, we worked really well with them when they were at Primex, and we're super pleased. They as their CEO said, one of the first phone calls we make was calling us. I'm like, man, that's where we want to be. We're just in the DNA, embedded in. So we're.
This episode is brought to you by our friends at ComboCurve. If you haven't heard, Aries and PhD win are out and ComboCurve is in. ComboCurve is the cloud-based operating system for energy companies. This single integrated platform helps your engineering teams become more agile, precise, and efficient than ever before. For the first time ever, you now generate type curves and forecast thousands of wells accurately and in a fraction of the time. Oh, and it can automatically run these forecasts every single day. What I love most about the ComboCurve team is their work ethic and actually caring about their customers. Every time I talk to the team, Armand, Jeremy, everybody else over there, they're reinvesting into growing the development team to tackle any challenges that their clients may be facing. But don't take my word for it. Go over to combocurve.com, read the dozens of testimonials on their website from clients like ARM Energy, Laredo Petroleum, Rock and W Minerals, and many more. Request a demo, and these guys will get you taken care of.
Super pleased about that. But it's when we talk about price points, the price point could be as small as, hey, I just want to rent data and a model from you in one basin, and I need it for 6 months.
Yep.
That kind of commercial flexibility is kind of broken fundamentally in the market. Like it used to exist, and now it no longer exists.
Yeah.
Well, the model part didn't exist. We're trying to fix the whole thing, and we're also trying to increase the flexibility commercially, so you're not having to spend $300,000-$400,000 to get started, right?
Yeah.
You're spending, $50,000 or $100,000, and you have everything you need. And then you go hire your people, which is the real expense. And then you give them tools that make them super productive. So you can have a very lean team. You can look at a lot of deals. You can do proactive targeting, and they're just completely unleashed. So our pricing model is driven by users, of course, and it's also driven by we do enterprise level pricing. If they're like, I just want everything. There are some companies that just want everything. So we try to be very flexible in our terms.
So what are the 4 different options again?
Oh, sorry. So just data.
Okay.
Which is shale profiles, legacy business. Data plus software, which is essentially our integrated data analytics offering, right? And then the third leg of the stool is data plus software plus an out-of-the-box model. So we'll just license that. Think of it like model as a service, right? We'll just license that as a
is that a model that you guys have pre-built, or you build on this?
Yeah, so we have pre-built models in almost every one of the major shale plays that are based on our 7 years of experience, or almost 8 now. And we built thousands of models for customers, and we have the type of customers where they don't give you any quarter if you screw up. Like they have to be good. So we've got years of experience now, and we've kind of taken all that experience and essentially summarized it in the how these models are put together. So like there's a lot of what data do I use, what variables do I use, what wells do I use to train it, given the type of insight I want it to give me. So we have a few sort of reference models that we deliver, and then for customers that sign up for this model as a service, we'll keep those updated once a quarter. So as new data comes in, they'll basically just on a rolling basis get the best of what we offer. With quarterly updates, data updates are automatic. So that's just part of the subscription.
Before we hopped on the mic, you were talking a lot, and I think you've kind of alluded a little bit. It seems like you very clearly have like this mission in your head of things that you want to fix in this space. Like, so what is your, I don't know if it's a vision or like a mission statement, or like, what are you trying to really ultimately solve? Like, what is your North Star for this?
Our mission statement is pretty simple. We want to help the world secure energy independence. So energy independence comes from finding your. Let me back up one step. So if you think about the global economics of oil, right? There are countries that have it, and then there are countries that don't.
Yep.
And the countries that don't are hugely disadvantaged economically. So if we can devise ways to help the companies that have it produce it for the lowest possible price, with the maximum possible productivity, everyone gets kind of lifted up. So if you don't have it, Maybe you do have it and you don't know. That's also possible. But if you don't have it, the companies that are producing it can produce it at a much lower price because their chances of finding oil are better. Their chances of producing the maximum amount for every dollar spent are better. And frankly, oil companies have to be able to attract capital. So especially these days, they've got to show free cash return to their investors, right?
Mm-hmm.
So all of those things are pretty germane to the overall problem. So what we're trying to do is maximize the economic success of every dollar that's spent. What is the return on that investment? If you fix that, then every participant in the energy economy, which is everyone, every country, every government, that's like their first goal. Do the lights work in my country when people turn a light switch on, right? Yeah. And it's very fundamental, but we feel like how do I help the production of energy happen at a free cash return that is attractive to get the money in, so that they can actually produce it, so that then they can sell it, and so that then somebody who doesn't have oil in their country turns the lights on and the lights work. So I have kind of a long view on it, really, and it's my background is economics. So I think about incentives. I think about how these global dependencies that exist between countries and governments and all those sorts of things. And we have this amazing resource here in the U.S. and we have this amazing sort of know-how as to how to extract this stuff, and it keeps getting better and better over time. So our job is to help it keep getting better and better over time. Eventually, shale know-how here is going to be exported globally, right? Yeah. It's already happening in the Vaca Muerta play down in Argentina. We have several customers down there. Colombia, if things change regulatory-wise, they may be in it. They have a massive resource there. Asia actually has a massive unconventional resource. Saudi Arabia is making investments like the Jafurah field. They've drilled 200 gas wells there, and they're pretty amazing. So there's a lot of upside potential, and I think this eventually what's been pioneered here in the U.S. and the know-how starting from George Mitchell to figure out how to do this, extract hydrocarbons using a horizontal wellbore. That's going to be exported globally. So I think of Novi has a role in the energy economy, and right now, because we don't have as many customers as I'd like us to have, our role is limited. I want our role to be bigger.
So you definitely have your sights set on global.
Yeah, it's not, certainly Novi has investors, of which I am one. So we want to produce a good return for our investors too, just like we want to help our customers produce the best returns for their investors. But on the other hand, we're a market participant, and this is an industry. And I've done very well personally in this industry, and I know a lot of people who have as well. And we feel we owe the industry a debt of gratitude to learn from what we've learned, to pass it on, and really the data footprint that you leave behind and helping customers sort through that and make better decisions in the future is a big part of the legacy that you pass to the next generation, right? So I think about all those things when we think about our thesis on the market and our strategy and how we're going to grow our company and why we think our company deserves to grow long term.
I think one of the things that you said that is sticking with me and something that I've been kind of thinking on a lot lately. I'm always thinking about the future and thinking about what does my future look like? What does the future of the energy industry look like? I don't know. I'm constantly just thinking about that. And, it's easy if you were talking to somebody from outside the industry and they're like, what do you do? And you're like, oh, I run a software company and, an energy, for them to be like, oh, yeah, that's whatever. But what you said was energy literally touches every single person on the planet.
For sure.
So is there anything and this is what I've been thinking about, is there anything more important that I could be spending my time on?
Yeah, I think about that, and I can't think of anything.
I can't think of anything. If we go to Mars, what do we need? We need energy infrastructure.
Yeah.
Day one, we need energy to get there, first off.
Yeah.
And then we need energy infrastructure day one to build a civilization. I mean, it's just so interwoven in the fabric of modern society.
Yeah. For sure. It all boils down to the light switch. You flip the light switch, and if the lights don't go on reliably 100% of the time, then you failed. It doesn't matter where you're deploying energy, you failed. Yeah. it's not reliable.
Yeah.
So I feel like producing it at the lowest possible cost, securing a good return for the investment required to produce it, which is substantial, is gonna feed the light switch going on in the companies in the countries that don't have it.
Yeah.
That's our role to play. So I want a bigger role, not just because I want more revenue and I want my company to be more valuable. I want to be able to facilitate the delivery of this, and it's only going to happen if the companies investing the money are producing a good enough return to attract capital. And so we kind of focused on the economic side of the problem from the very beginning.
So now that oil is, I mean, I don't know if we're actually officially at 90. I know we were like 87, 88.
Yeah.
Where are you, without giving you proprietary information, where are you seeing opportunities for, because we have a whole lot of guys who listen, who are wanting to go out on their own. A lot of engineers, a lot of landmen, a lot of just BD guys want to go out, start their own E&P. There's still so much money in there. Where are you guys seeing opportunities? I mean, you have access to all this data now.
Yeah. So the biggest, if you think of the traditional developed plays, right? Williston, particularly the Permian, right? Eagle Ford's pretty drilled up. So if you kind of look at those plays, the biggest challenge is to figure out how, if I go in and do development when there's development all around me, or maybe even above and below me, how do I make money? Like, how do I compete for capital? So like answering that question, being able to build a thesis, test it quickly, fail fast is really important. And our software provides great insight into those kinds of questions. So I feel like delivering software to the industry that allows them to do that kind of analysis fairly quickly on any parcel size that they want is the key to figuring that out. I find the renewed interest in traditional gas plays also super interesting. So, I mean, you see Southwestern and Chesapeake in particular. Chesapeake's like sold their powder assets. A few years ago, the focus for them was, get out of gas, get into oil, get more oily, right? So they bought Wild Horse, Eagle Ford asset, and they bought stuff in the powder, and now it's like, I don't know what they're going to do with the Wild Horse thing, but they just bought Chief.
Yeah.
And then they bought Vine in the Haynesville. So you're seeing a lot more renewed interest in capital going into these gas plays, because the economics on a gas well, if it's above like $2.50, $3 an MSCF, it's just ridiculous how much money you can, especially in places like the Haynesville, where you've got access to pipeline, you can get it to market and for a very low differential. So those are very, looking at some of these traditional gas plays suddenly super interesting. I mean, one of our customers, a major private equity firm, recently funded a transaction in the Haynesville. So they acquired a public company. This is a $500 million deal, and it was our software was a part of it. Okay, let's run some development scenarios. They got a lot of undeveloped acreage. Let's see what this is worth. Because a lot of those gas plays, like, they were their first in, right, on shale. So they were developed early. Like the Barnett development started way back, and Haynesville was developed and Fayetteville was developed. And then everyone went away from those places. The capital all went to oil, right? Now, notably, Marcellus has been different. But EQT has been very active up there on the acquisition front. They've bought all kinds of stuff. So the big players bought the small players at lower valuations. Now, of course, they're getting significant upside.
Random left turn. Bitcoin mining using natural gas is taking off. We're doing an entire conference in March 31st called Empower, focusing on the intersection of energy and Bitcoin. Is that something that you guys, or has anybody requested it, or have you guys thought about it in terms of building that into the model? Because we ran some models. We've had a whole bunch of producers come in here. We've had miners come in here and ran models on, or obviously Bitcoin's like half of what it was when I'm going to say this, but it was $60,000 Bitcoin. We put in a whole bunch of different parameters for different miners and stuff. And essentially the net back was $35 an MCF, right? As opposed to, what is it, $3 now?
Yep.
Right? So what's interesting is tons of operators have reached out, and now I think that the E&P of the future potentially could be at the flick of a button. You're either selling to the market, or you're mining Bitcoin, or you're providing hosting services, or whatever it may be, using that energy. Is that something you guys have thought about? Have you been asked for it?
We have not been asked for it. We have thought about it off and on. I think we think a lot about what causes capital to be invested in any kind of E&P type asset, right? So the return obviously is the big driver, right? So whoever's giving you the money, they're interested in the free cash, the share appreciation, those sorts of things. If it's a public company, it's a private company, they're just interested in the net asset value going up, so someday they can sell it to a public company. So one of the big drivers that we see, and that we're probably going to work on as our sort of next big problem, is helping on the ESG front. So we're already doing production forecasting. So we think about, well, if we're forecasting oil, gas, and water production, there are some relatively straightforward equations that you can use to determine things like methane emissions or stuff like that. So we're super interested in helping our customers balance. It used to be you had 3 legs to the stool. Now there's 4, and the fourth one, when it comes to making an investment decision, the fourth one now is you have to look at, well, okay, what is the emissions profile of this unit that I might drill? That's kind of like, because you have to think about that, because your investors are demanding it, and they may not give you money if you don't meet some arbitrary emissions threshold or whatever. Plus, I do think a lot about, like how do we overall, there's companies like Exxon have come out with announcements that we want to be carbon neutral by 2050 or whatever the date is, and we're like, well, how can we help them do that? I mean, that's obviously a goal. And I do read public filings, certainly of our customers. When I see them talking about putting incentives in place for their management team, where if the management team achieves certain ESG objectives, that's 25% of their bonus. Like now you put a very strong incentive in place, and I think that's gonna happen, right? Because of course that company is then going to tell the investor community, hey, we put our money where our mouth is. Our managers are actually incented to keep emissions below thresholds, and those thresholds are declining, meaning we're pushing them for more and more, just like we push them for more and more free cash, and we push them for more and more production. We're also pushing them for less and less emissions. So we're thinking that's a really a problem that is directly tangential to the problem we already solve for our customers today. So we're thinking of how do we add a forecast for emissions as a good starting point. So I think the Bitcoin problem is super interesting. I'm I'm interested in anything that sort of, currency is a form of risk, right? So if you accept payment in US dollars, what did the US print last year? 10 trillion. That's a lot.
I want to say, I don't know the exact number, like 30%, maybe 40% of the money supply was printed in 2020, 21.
Yeah. So a lot of, how getting paid in dollars is a good way to get paid, because it's based on trust though. The value of a dollar is based on trust. It's a commodity that is exchanged, right? Just like Bitcoin is. But at least with Bitcoin, you don't have the people in Congress or legislative bodies that are arbitrarily reducing the value of the currency by just flooding the market with more currency. There is a supply and demand for currency just like anything else, right?
It's crazy to think that what if in 5 years, all of your NPVs are not in dollars, but in Bitcoin or in something else, right? Ethereum.
I could easily see that happening. Right now, in our software, you put your forward expectations on WTI price and MSCUF price and all that. You put it in our software, right? Well, you could just as easily put it in there in Bitcoin, dollars. We don't care, and then we could change the metrics on the outputs that they would actually change automatically. So it wouldn't be hard for us to do that. But I could see this particular industry shifting that way. It gets back to what I was saying earlier about this being a sort of global interconnected market. for energy, the safest way to trade currency could indeed be Ethereum or Bitcoin, because you don't have the problem of arbitrary flooding in the market, which devalues your investment, right? Because oil well is a 30-year, onshore oil well is a 30 to 50-year investment, right?
Yep.
So a lot could happen in 30 to 50 years. Would anyone have anticipated that the U.S. government would flood the economy with $10 trillion and now we have massive inflation? Would you have anticipated that 3 years ago? I wouldn't, but that's what happened. So that arbitrarily decreases the value of the dollar and causes inflationary pressure. Bitcoin is kind of immune, to crypto in general. It's kind of immune. It's why you're seeing all these investors put money into it, because theoretically it is safer. Now, the more participants there are in the market, you're going to see a lot less of this arbitrage type currency fluctuation that you see with Bitcoin. It's 60,000 one day and 20,000 the next. I think the more participants there are, the reason the dollar is pretty stable is because everyone trades the dollar. Every bank, every country, everyone trades the dollar, right?
So obviously I'm feeling the effects of inflation. Our home prices shot up which is great, but if I wanted to get out of it, so is every other house. And so I'm getting it at the top.
And so is rent prices.
So rent prices are high.
Unless you're going to go live in a tent underneath a 290 overpass, you're kind of out of options.
There's like ridiculous market adjustments for certain vehicles on the market currently. It's all over the place. It's up and down. I'm curious, from your perspective, have operators felt the effects of inflation on drilling a well? I mean, give or take, usually shale wells about $10 million to drill and complete. I mean, have they started feeling that? Is it bumped up to a 12, 13, 15? I don't know.
No, I mean, they industry in general did a really good job just through gaining efficiencies and renegotiating contract. I mean, I was working at an oil company, and we had 20 rigs going, right? So we were almost willing to pay any price,
blown and going, man,
to get a rig. Now nobody's doing that now. Nobody's doing programs of that size, just because of this focus on free cash. But we used to have to make all kinds of commitments to get the rigs, 3-year commitment, this and that, and then you can't get out of the contract. And of course, when the price goes down of oil, you're stuck. But a lot of, I feel like prices need to, from service providers, oil field service providers, do need to come back up, because they had to make more concessions even, after the COVID-induced downturn. But I don't think it's going to cause price of oil to go up that high, because there's always the market kind of balances itself. That's what I've always seen. So yes, they'll increase prices and operators are willing to accept a certain amount. But if they push the price too high, operators can't attract capital because the returns are not as high, right? Yeah. They're projected free cash flow returns, and therefore they can't. So the participants kind of have to balance each other out. And I feel like the market finds a good balance. I do think it's bad that there's been so much consolidation in oilfield services. I think that's kind of a negative, because if there's less companies around, you get the same problem that exists with legacy data providers today, where there's two or three pseudo monopolists running around, and customers are stuck. I can only buy from Halliburton because nobody's left, or whatever. I'm not singling out Halliburton, but all of them need to raise prices. They're due that, because they made a lot of concessions. Really, over the last 5 years, has been a lot of concessions, but they've also gotten a lot more efficient. Equipment is improved. The frac rates have improved. They did all the things that they could do to squeeze as much juice out of the lemon as they could. But they're due increase in price. So I think there will be some increase in price, but I don't think it's going to be monumental. And really, with prices where they are now, I mean, I read with great interest the other day, Pioneer decided to take off all their hedges, right?
Really?
Yeah. Because once oil gets to a certain price, you're paying a lot of money to hedge. And it's okay, the macro trends, it doesn't look like it's going to be dropping anytime soon. Not certainly not plummeting to negative 37 or anything like that. So the value of a hedge goes down. And if you're able to sell oil, you're able to sign marketing contracts at $80 a barrel. Those contracts are longer term contracts. They're not subject to the trading price of WTI futures, right? It's based on that, but once you have a contract, you have a contract. So they must have enough confidence that things will be relatively stable at a relatively high price, and therefore not worth paying for hedges.
Let me tell you, it feels good to see oil prices where they've been, especially after negative 37. It feels like I came into the industry 2013, 2014. And then obviously we had the crash of 15, 16. It feels like one gigantic downturn. So I feel like for the first time, everybody can catch their breath. And I feel like we're finally kind of bouncing back. It seems like optimism is coming back. It seems like everybody's looking to hire. It seems like we can't find enough people, which I think is really interesting. And I think also for the first time, maybe in history, due to, a lot of climate stuff and kind of broader energy stuff, it just seems like energy is really at the forefront of public conversation, and I think you also have a couple things like the freeze that we experienced. Was that last year? I think it was last year. Yeah. The last few years all just kind of like blend together. But the freeze we had last year, I think, made a lot of people appreciate, when the lights go off. So does a lot of things, So I think it's really, really interesting. I'm super bullish on this industry. It's not going anywhere. It's exciting to see a lot of innovation, just a lot of hype. And I know we're excited. We've got a lot of really cool things planned for this year. So it's been great catching up again for the third time. I'm sure we'll catch up again. And
do you have any other 3-time participants? Am I the only one? I was early. So, I was one of the earlier ones that you all did.
I think Adler with Source Energy may be a 3-timer.
We should get jackets or something, man.
We should. There's like an exclusive club.
The Saturday Night Live guys that have the five, that Tom Hanks has the 5 on there because he's the velour jacket. Yeah. You got to get those, man.
You need those. Maybe you get like a Masters jacket, like the green ones.
Yeah, that'd be sweet. Yeah.
I think Josh Robbins with Beechwood, but he was also coming to Houston like every other day. And so we had him on a few different times. He's doing a lot of cool stuff and you catch up with him too. But there's an exclusive club. There's definitely no more than like maybe 3 of you guys.
Awesome.
We're gonna maybe do like a wall of fame. Start something in here. So
it's a great idea. These are great ideas.
It's been great catching up.
Absolutely.
Looking forward to continuing to see the growth and success that you guys have had. So cool to see the acquisition of Shale Profile. So I'm here for it.
Thanks,
Can't
man.
wait to see what's next, man.
All right. Appreciate it.
All right, guys. Take 2 seconds. Go check out our website. We got a lot of really cool events coming up. We've got Zero coming up in April, which is going to be focused on a lot of the different technologies that are really going to help this industry get to more of a lower carbon future, lowering emissions and stuff as an industry. Also, we've got our Empower Conference March 30th and 31st here in Houston at Eighth Wonder Brewery. We're expecting about 2,500 attendees. We just found out yesterday Ted Cruz is going to be speaking, along with pretty much anybody who's anybody in oil and gas who is doing something with Bitcoin mining, also a lot of big name miners as well. So if you're interested in that space, be sure to check it out. We'll see you guys there.